that's just really out of reach for Gen Z. So how are we building wealth? We're looking at assets that are a little bit more liquid, a lot more within reach, that don't have several $100,000 that you need or a large down payment. That comes with equities, fractional shares, stocks. You can buy a stock now for as little as $1 or $5 versus having to put, $20,000, $50,000 on a down payment for a house.
Who the f am I to tell you what to do with your money?
My name is Priya, currently managing millions of hardworking dollars. Enough foreplay. Let's talk
Money.
Welcome to the F word. Smart money.
No bull.
Taylor Price, welcome to the show.
Thank you for having me.
I'm so excited to have you. You're better known as Priceless Tay, and you're a Gen Z money expert, which is so cool because you're for Gen Z and I'm on, let's say, the elder side of elder millennial. So this should be an awesome and very interesting conversation. I'm so excited to introduce you to the audience because you've built an incredible media brand. Like, wow. So impressed. I love what you're doing with Priceless Tay. It's so fun, so accessible. But just to take it back a sec, I'm curious, what was money like for you growing up?
Well, first off, I want to say thank you so much. And I get the question very early on. You mentioned my platform, Priceless Tay, and my name being Taylor Price. It's one of the questions that Forbes just asked me in LA on stage at the Creator Upfronts. Is your last name really Price? Yes, it is. I got to thank my parents for that one. Money was something that we definitely were informed about growing up. I grew up in a working household. My parents started a small industrial uniform rental company back in the 1990s. And so they taught me early on that money is a tool. It's not necessarily something to fear, or on the opposite hand, something to worship, but something to understand, use intentionally, use it wisely. And so firsthand, I saw how financial decisions ripple through your entire life, not just in the business, but at home, in family matters, in relationships, and at the end of the day, even yourself, how you're able to take care of yourself or not take care of yourself. And growing up in that environment, that really shaped everything for me. I learned that you can have big dreams, but you can also still be practical at the end of the day. And that's really what drove me to want to make finance accessible, because I knew what it felt like to sort of have some of these questions and not necessarily know exactly where to turn, because not all of us want to talk to our parents 24/7, especially about more intimate conversations.
Yeah, and not all parents feel comfortable to have those conversations or feel equipped to know how to have those conversations with their children. So it seems like you got a bit of a head start and had your parents really kind of early and young. I actually have a guest coming up in a couple weeks who's going to talk to us about money and children and how parents can really take it to turn money into a tool for their kids when they're young. And that's what your parents did for you, which is truly incredible. So did you always imagine yourself teaching finance then, or was it something you stumbled? I know a little bit of this story, but I'm excited for you to tell it. How did you stumble into it, and what track were you on, Taylor?
I like to say, bringing back to the name first up, Taylor relates to sewing. So early back in the day, I thought I was going to be a part of my parents' small industrial uniform rental company. Not the case. Then there's a segment of my life that's not in my name. I wanted to be a neurosurgeon. I was studying pre-med. That was the plan, but life really had other ideas. I had a medical procedure that completely redirected my path. For those who maybe are aware of it, it's called scoliosis. I was at a point where I had to get a major surgery, and at first it was devastating. But that experience taught me something very powerful. Sometimes, I mentioned this too, not directly on stage at Forbes, but it was in some line that we were chatting with people. Some dreams die so better ones can be born. And with that said, Fast forward, I dropped out of college. I transitioned majors and I asked my mom, what should I do with my life? And in this transition, she said, why don't you go into finance? And so I did. And I quickly realized in that transition that corporate finance and personal finance were two very different conversations. And I, as an 18-year-old, 17-year-old, was expecting to learn how to budget, how to get a good credit score, how to pay my taxes for the first time. I wasn't really expecting to not know any of that while also learning how to analyze Amazon, Apple's, whoever's financial statements of billion, trillion dollar companies. But I was really struggling with my own personal finances and not knowing what to do at a young age. And when I looked towards the traditional education system, literally asking my counselors, "Hey, are there gen eds for, basic financial literacy? Like I'm really behind here, I feel." They're like, "No, there's not. You're in the right spot." And I was like, how can this be? I wanted to be a neurosurgeon. So that kind of indicates I have a little bit of intelligence here. And now I'm starting to analyze numbers that have several commas, not just one. And so I did my research. And at that time in 2017, 6 out of 50 states required a personal finance course for testing in high school. And New York State, where I grew up, was not one of them. And so that really pushed me to start this conversation of why aren't we talking about this in school? I am now a corporate finance major, and yet I have no idea about personal finance. How can this be? Started as a blog, then turned into videos after. Gen Z doesn't really like reading. We like watching videos. We like YouTube, Instagram, now TikTok. TikTok wasn't a thing really when I first started, but in 2019, when it was a dancing platform, I decided, you know what? Let me bring this handy dandy financial literacy stuff that I've been talking about on YouTube and Instagram over to TikTok and see how that goes. And
were you dancing?
no, I wasn't. I wasn't really doing the pointing on the screen or anything like that. There's some videos early on back in the day, but it really was just me talking to the camera. And back then, you could just talk to the camera and poof, if the topic was good, it would go mega viral. And at that time, again, I was the only one, at least as I know, my age, 17, 18 years old at the time. And it was like, I'm struggling with this too. And by the way, I'm in the UK. I'm not even in the US. And then I was like, oh, wait, this isn't just like a New York State problem. This isn't just a United States problem. This is a global, I like to call it silent pandemic, because at the time before COVID, nobody was talking about it. And then COVID happened. And then there was these two struggles going on, both physically from the medical perspective of what was going on globally, and then as well as what was going on financially. People getting laid off, not knowing what to do with their money, stock market crashing, then rebounding, and all these different things going on. And so long story, but that's really how I got started. And to recap, I did not imagine myself teaching finance.
Your advice was at the right place at the right time.
Exactly.
Kind of.
Yeah.
That's incredible. I mean, it's one thing to put a blog out there and even a couple TikToks. It's another thing to turn yourself into a major media brand, which is what you've done with Priceless Tay, because you are all over the place. You just spoke at Forbes, as you mentioned, not for the first time even. You've really made a name for yourself. You met Barbara Corcoran. You've done all kinds of incredible things. What was the switch for, I'm just going to teach personal finance and budgeting online, to no, wait, this is an empire. This is way bigger than I thought.
Yeah, Priceless Tay was born out of frustration, honestly. I was in my late teens and early 20s trying to figure out money, and everything that I found was either way too complicated or way too boring or talked down to me like I was a child. And at the time, there was nobody there who I could relate to or speak like a friend. There was resources that traditional financial advisors use. And then there was blogs, which I won't name, but there's blogs that are still great out there today, but they're not beginner friendly whatsoever. There's so much financial jargon. And for somebody my age, it was just way too complicated. So when I brought the message really onto TikTok and I had that moment of virality, I decided to make it into a movement, not just having this one moment where it's, yeah, this conversation was really important. Like, let's move on from it. It was, no, this conversation was really important. Now, what do we do? Let's create a movement. Let's talk about it more. Let's do bigger things. Let's go on podcasts, for example, like this one. Let's go on stage. Let's go to colleges, speak. All of these things really amassed to now where there's so many people like me talking about finances online. I mean, people even are now just outside of work wanting to create content on, this is what I'm doing for my budget this week on my groceries, on my gas, on my Amazon impulse purchases that, oh, wait, I decided to say no to. I'm just going to put it in my notes app. De-influencing what you don't need. All of everything is starting to tie back to money from the consumer perspective. At least that's what I'm seeing on social media nowadays.
Oh my God, so true. That's incredible. I love your energy. I am so inspired by you. You're barely in your mid-20s and you are crushing it. Just for context, can you tell us like what age range counts as Gen Z these days?
Yeah, it's 1997 to 2012. Depending on who you ask, sometimes it could be 1995 to 2010.
Okay, that's helpful. So 30-ish or younger?
They're a little bit younger than 30 right now. So I'm 25. I'm a Gen Zer. I was born 2000. So they're about, as you mentioned, a little bit under 30 and then in their late teens.
Yeah. Okay, so what are the core money topics that you find they're most interested in right now?
Investing. They want to build wealth and get rich. They don't just want a budget. I think side hustles and income growth are a big one because they're tired of feeling broke. They actually want to do things and travel. Gen Zers are experiencers. We want to go to the concerts. We want a vacation. Every weekend we want to try and do something. And so I think those are kind of the biggest conversations that are going. And I want to say as well, too, I think maybe what's different between generations, Gen Z isn't necessarily asking, how can I afford something? I think we've kind of adopted this mindset, especially with side hustles and that economy growing. How do I make this work for my future? How can I do this? It's more of a wealth building abundance mindset than a full scarcity mindset.
That's a really interesting nuance. It's not about how can I afford something. It's about what do I want, and then I'll go figure out how to afford it. I will create the resources for myself to afford the life that I want.
And it makes total sense too, because at least I'm just validating my own point. But I think it makes like total sense because of the internet. Like, we are in the age of the knowledge economy. Everything is out there. You have any type of AI platform that you want to ask to get the answers for your questions. Okay, you maybe didn't resonate with how a real human responded to you at some point, or you didn't understand that teacher that you had in math class back in the day. Okay, that's fine. Go to an AI platform, and now they know exactly how to talk to you in whatever language that suits you best. And so the mindset is a lot easier to adopt with having the knowledge right at your fingertips versus even just 5 years ago. It was a lot harder. You had to go on Google search and then research it and then maybe find it versus straight up just ask a question and then so many different resources come up.
Hope you understand the answer. Now you can just get the answer tailored to you so that you do understand it. That is such a great point. So true. My perception is that Gen Z is much more willing to have hard conversations, whether it's anything from religion to politics to GLP-1s. Do you see money And I think I know the answer, but do you see money falling into that category?
Yeah, Gen Z has shattered the taboo of money. We're talking about salaries on TikTok. We're sharing budget breakdowns on Instagram, like I said, the grocery shopping hauls and what we're spending and buying. And the transparency is powerful. Where I think that stems from is growing up in an environment where therapy was okay and accepted versus our parents' generation. Therapy wasn't really a big thing back in the 60s, 70s, and 80s. Therapy now and having conversations and being more open is definitely something of the 2020s, by no doubt whatsoever. And so, between those two parallels, I think they collide because money is a personal conversation. And we're having these personal conversations, whether they're professionals or with close friends and family. And so it just, to me, yes, it makes sense that they kind of all coincide one another.
That's amazing. You guys are really paving the way for a different type of future, one with hopefully a lot more transparency and knowledge around how to use your money and make it work for you. Because I think that is just the thing that everyone feels. We've talked about it. The theme running through this is that it's not taught in school. You have to go out there and find the education for yourself. And when you're in a world where people are more willing to talk about it, it just penetrates much more naturally because it's a language you're so much more comfortable and familiar with.
Exactly.
So, what would you say from your perspective? Because yes, you focus on Gen Z, but you're aware of what's happening in the millennial generation. And I would be curious, some of the biggest differences you see between the way Gen Z and millennials approach money beyond the openness and the therapy aspect.
Great question. I think, and we alluded about this a little bit before, but I think millennials, and correct me if I'm wrong here, elder millennials were kind of sold this dream: go to college, get a good job, buy a house, retire at the traditional age of 65. Gen Z has now kind of watched that dream kind of become financially out of reach for a lot of people. The data is there. People are getting married later on. They're having kids later on, like later in life. They're not buying houses as early as some of the previous generations. So we're a lot more skeptical. We're more entrepreneurial. We're more focused on trying to build wealth rather than waiting. And so for the millennials and older generations, I think that concept of building wealth ties back to, again, buying that house and getting this good job. That's just really out of reach for Gen Z. So how are we building wealth? We're looking at assets that are a little bit more liquid, a lot more within reach, that don't have several $100,000 that you need or a large down payment. That comes with equities, fractional shares, stocks. You can buy a stock now for as little as $1 or $5 versus having to put, $20,000, $50,000 on a down payment for a house. And also, just from the liquidity aspect, Gen Z, again, is not necessarily like waiting around. And so they're also looking towards liquid assets that, not that I suggest this, but if they needed the money and they needed to pull it out for whatever reason, they could just sell the stocks, right? Versus a house, it's a much bigger conversation. There's closing costs involved. You have to list it, stage it. There's a lot more variables that come into play versus just buying the thing and then selling the thing and waiting for the cash to settle so then you can do whatever you want with it.
I love that. And I'm really happy to see more and more the conversation around the fact that your home is the cornerstone of your portfolio. That narrative is dying because it's mathematically not even true. And that's a big myth that we bust around here. I just want to pause and talk a little bit more about the investing for a second, because there's a big difference between investing and gambling. And a lot of times when we talk about stock investing, when I'm talking about this, I put it in the category of gambling because it's concentrated risk. How do you talk about investing right for Gen Z?
It's always for the long term. So people ask me, like, where does crypto fall and all these NVIDIA and Apple and all these like fun, crazy things? Those are satellite holdings to me. I follow a core portfolio, 3-fund strategy, boring but beautiful in the long term. A total market US ETF for the first investment. Then it's an international fund, and then it's a bond when you become that age. Now, I'm 25 now, so I'm not hedging my bets here. I'm taking as much risk as I can. I don't plan on retiring soon, but asset allocation and how the mix is might vary. Again, don't take this as advice if you're older. And so when Gen Zers come and you bring up a good point, the investing versus gambling, I'm looking at it at the long term. I'm looking at it 5 years ago. If you invested in the S&P 500, you would have doubled your money, but in 2025. I'm not looking at it as, oh, if you invested in Bitcoin today and then you sold it tomorrow, what would that mean? First off, I don't think a lot of young people realize that these things have taxes involved. When GameStop was happening, I made this video on, I just made X amount of dollars. I didn't actually invest in it, but it was this POV of me being somebody that had invested in GameStop and then chatting with a friend and then covered, oh yeah, I actually have to pay a lot of taxes on this short-term capital gains tax because it was trading. And they're like, what? No way. I never even realized that was a thing. And I also think that's something that a lot of young people don't really realize. So long-term investing, when you're doing it right, it's optimized in all aspects of growing your money in the long term, saving on those taxes because long-term gains are taxed differently than short-term. And then I also talk about, at least on Priceless Tay on my platform, that where you invest is just as important as what you invest in. So the accounts that you're investing in, whether that's, a Roth IRA or, like you mentioned, more of the gambling happens in those individual brokerage accounts. And so talking about taxes and saving money and looking at the long term, always trying to focus first on the retirement planning accounts, the safety nets kind of deal, versus then if you have the fun nuance and you like the feel of the roller coaster rides that individual stock investing or crypto investing occurs, individual brokerage account, have your swing at it, know that there's taxes involved, and have a nice day.
Yeah, asset location is just as important as asset allocation.
Exactly.
I love how you frame it. The thing that we add is investing without a goal in mind, investing for the sake of investing in an effort to, hope your money grows over time to some arbitrary amount is not efficient and really resembles gambling much more than it does investing.
100%. Yeah, and I also teach that as well too. It's so important that you look at the holistic perspective, not just what's going on outside. It all starts internally. It's how you perceive money. It's what you need money to do for you. And with those combinations in mind, it might not even be stocks are the best thing for you based on how you react to what's going on in the market or your goals. I love that you call that out and point it out. I think from the Gen Z perspective, there is the goal in mind, this general concept. I'm not going to name it for everybody. I think that there's this general concept, though, of relating kind of this idea of retirement with financial freedom. And they kind of conjoin the two together of, if I can invest for financial freedom, I'll be able to retire. Now, there's a lot of math that gets involved in there. How much are you spending in retirement? What's inflation going to do, 20, 30, 40 years from now, depending on what age you're retiring at, especially if it's not 65 years old.
Right. How long are you going to live?
Yeah. How long longevity how long are you going to live? There's all these costs that come into play, but I love that you pointed out, because really at the end of the day, it is reverse engineering the numbers as well too.
Yeah, absolutely. Okay, so clearly Gen Z is crushing it because they have Priceless Tay's advice at their fingertips. Can you give us like the number one mistake you're seeing Gen Z make?
As I mentioned, I think the main topic that they love to get into is investing. So they just jump right into it. They skip the foundation. And to be honest, and to be frank as well too, I originally was at the top of the money tree trying to grow my investments quickly versus not having an emergency fund at the time. I fell prey to that narrative. I get it. Investing feels sexy, budgeting feels very boring. But the thing is, you can't build a house without a foundation. If you don't have $500 saved for an emergency, that first unexpected expense will wipe you out. Then you're going to have to sell your investments. Then, if you made a profit, you're going to have to be taxed on those gains. And so, this is when I rescinded everything that I originally thought and was like, okay, let me go back to the basics here. So I put it into this framework that I call the foundation first framework. It's starting with a small emergency fund of $1,000 or 1 month of necessary essential expenses. This is so in a case there is emergency, you have liquid cash. You don't need to sell anything. You don't need to get into debt on a credit card. If you have high interest debt, the next step would be to tackle that high interest debt. I get questions all the time of, should I invest with debt? Because again, investing is such a huge conversation nowadays with my generation. Depends. If it's high interest debt, then probably pay off that and be aggressive with paying off that debt, because there's not going to be really any investments that outpace guaranteed that 22% interest that you're paying on that debt outside of matching your 401k, because that's your employer getting that 100% return. To different conversation. From there, then it's splitting your money between savings and fully building that emergency fund of 3 to 6 months of necessary essential expenses, and also saving for some shorter term goals. From there, after you got that tackled down, then it's full on wealth building mode. As you mentioned, you need to have that goal in mind. Where you invest on a down payment for a house fund is going to be very different than where you invest if you do plan on taking the traditional route and then retiring at 65. If you're a teacher, for example, it's not glamorous, but it works.
I couldn't agree more. You basically described the stash plan process that we do with 30-somethings. Your take on the emergency fund is an interesting one, and a major difference I see between Gen Z and Millennials. We at Stashwell talk about your emergency fund being 3 months worth of your fixed expenses. We get a lot of pushback, that people are like, well, 3 months doesn't seem enough. Like I need 6 or 12 months. And yet you're pushing for 1 month on the other side, which quite frankly, the way we think about it, because obviously our stance is more aggressive, just like yours, much less conservative than most financial talking heads, is that your emergency fund is your first line of defense. It's not your only line of defense.
Right, exactly. I want to point out too, by no means do I say having $1,000 or 1 month of necessary expenses is the fully funded emergency fund. There's a key word there, and it's the starter emergency fund. So if you have high interest debt and you're just tackling the minimums, we don't want to go into more debt and pay that 22% interest. So that's where building that starter emergency fund comes into play, where if your car breaks down and you need to spend $600 on, new whatever for your car, then that money is set aside there so you're not racking up more debt. I 100% agree with you on having that fully funded, at least bare minimum 3 months.
Or you go to the dentist and you need a crown. You're not of that age yet, probably, but I feel like every time I go to the dentist, I'm like, what?
Yeah.
That's so annoying. A lot of times, and I don't want to jump in here with too much, but the idea that you keep more liquid in an emergency fund, the idea that you sit on 6 or 12 months, frankly, can actually be more of a disservice to you than it can an advantage because it's supposed to just be your first line of defense. I remember one of the biggest mistakes I saw really, really wealthy people make when I was working on Wall Street was that they didn't even have an emergency fund at all. And so their first line of defense were their investments. And they lived just right within their means, like within their income, but they wanted everything growing. They couldn't stand to see cash sitting on the sidelines for the emergency. So when the inevitable curveball came, which it does, they had to wreck their portfolio. They had to pay taxes. And it was such a disservice to their long-term strategy, their long-term plan. I mean, granted, they could afford it. It wasn't the end of the world.
Right.
But mathematically, it was a really bad idea and terribly inefficient.
Yeah, and that's a really great point. And I think high yield savings accounts now with younger people have had a idea of that it's still growing, versus the checking account now and straight up like physical cash is like the one that is like, don't have that. Like that is not, it's not growing. So there is the high yield savings account now that you see everybody, even myself as well, talking about to store that money. So you're at least keeping up with inflation.
Right. Great point. So is there anything you think Gen Z can learn from us millennials? Is there anything that you see us doing right that you are preaching to your audience that you guys could learn from?
Ooh, this is a great question. Millennials have been through a lot.
We got to be doing something right.
Yeah. I really think as far as the long-term game it goes is that millennials are still in this mindset of, you pointed it out, you said it yourself, longevity. When I was talking about the retirement, one of the things that you pointed out was the longevity aspect of things. And I don't think that Gen Z, quite frankly, is there yet thinking about how long are they going to live, or like how long are they going to need to sustain this money for. They're like living in the now, as I mentioned, and they're really focused on experiences, and they're looking towards assets that kind of embody those experiences or that quickness feel of things. And again, the liquid assets. And so I think Gen Z can learn from millennials the practice of longer term responsibility versus just kind of thinking more quickly in the now and how to get past these few years or maybe even in the next 10 years versus thinking, when am I going to die? Like how long, what do I really need to build towards here?
I appreciate that. There's still, millennials were raised by a generation that definitely prioritized pragmatism, I guess, and that seeped into us in a way, not to say that Gen Z isn't, but maybe we're a little bit more cautious in our approach and confident, but a little more risk averse, perhaps.
Yeah, right.
I could go on forever. We're going to have you back on. There's so much more to talk about. But if you had to sum up, what would you say is the key thing in your 20s and then what to focus on in your 30s?
In your 20s, I would say master the art of cash flow. Learn to live below your means, automate your savings, trying to invest consistently. I know it's hard, especially post-grad, trying to pay off student loans, trying to pay rent, groceries, while also still being a Gen Zer and living your life too. But this is where the habits you set up for your life are going to be regardless of what your income is. If you're making $50,000 post-grad and you transition to your 30s, which when I say start putting the pedal on further into wealth acceleration, those habits that you instilled in that time frame are going to just amplify when you have more income and more responsibilities are coming into your plate as well too. So it really is 20s, focus on the cash flow and those habits that you instill. Your 30s, really start focusing, in my opinion, on that acceleration of investing and trying to increase your income, trying to build assets at that time. Your 20s are for learning, your 30s are for earning. I'll leave it at that.
Oh, that's such a great way to sum it up. Learning and then earning. Yeah, I was going to say your 20s are for putting down that foundation, and then your 30s are for building that house.
Yes, exactly.
That's so great. And I love the point you made about habits. I can't tell you how many people I talk to that just think that when they're making $250 or $350 or $450,000, all of a sudden their habits are going to be that of a wealthy person. Like, your habits go with you. Your habits stay with you as your income increases. And once you're making six figures or more, you don't just magically know how to manage your money.
Nope. And those spending habits are still definitely going to be there. Lifestyle spending, lifestyle inflation is a real thing.
Totally. Not to minimize it, but if you're going out and buying a pair of shoes when you can buy six, you're probably going to buy a few more than one.
Exactly.
You know?
Yep.
So the habits and the automation, I love the automation piece. That is everything. I think so many people underestimate the value of automating your financial life. It is so much more fun to make progress without lifting a finger. And it is 2025. You can automate basically every aspect of your financial life. You don't actually have to be good at this stuff or be paying attention or be watching CNBC. You can literally be making your money work for you and
do whatever, live life.
I have a fast follower question. I said no more questions, but I have a fast follower question that I like to ask. So I'm going to put you on the spot a little bit. Taylor, when you get sad, what do you buy?
See, I have this thing where if I get sad, I go to work. Like, my work is my outlet, and a lot of what I do is a creative aspect of it as well too. I'm not thinking about buying anything, but if I were to choose something and I'm like, man, I need a pick me upper, it would definitely be a boba. It would be a black milk tea with tapioca pearls and lychee jelly, less ice.
Oh my God, that's great. I've never heard that one before. That's awesome. It sounds delicious too. And you might have answered my next question. So you go for a boba. That's your thing.
Yeah.
Like, okay, I feel better now.
You know, it depends. If it's on a weekend, I could go for maybe a Moscato, but during the weekday, it's probably a boba.
Now we're talking. I knew you were my girl. Yeah. Okay. I'm going to stick with the Moscato. Okay, so Taylor, we always close the show with a segment I call Best Bite. I'm a huge foodie. I love to eat. And where are you based again?
Naples, Florida.
Naples, Florida. That's right. You grew up in Hudson Valley.
Yes, that's correct.
But you're now down in Florida. Okay, so Best Bite, give me your best food recommendation. I want to know what you've eaten recently that absolutely blew your mind. Maybe you made it at home. Maybe you went out to a restaurant. Different from your boba, but I want to know where I need to go and what I need to try.
Oh, this is such a hard question because I'm doing this whole gluten-free restrictive diet for the next 90 days and Thanksgiving is coming up and I'm thinking about ending like 15 days early. I think I'm at day like 65 right now. So it's really difficult, at least here in Naples, Florida. I'm not just about the food. I'm also about the environment. The Turtle Club is absolutely amazing. You're sitting on the beach. You're looking at the ocean. You can literally take your shoes off. You're on the sand. And the food there is just great as well, too. Comes with a higher price tag because you have the view tax, quote, quote. But it is very delicious. Any fresh seafood there. It's like local.
Are you an oyster person?
Oh, I love oysters, too. Yeah. But It was something that actually I got into oysters in, I think, 2023 when I was in Toronto, Canada. They just had a lot of them there. It's probably because Prince Edward Island is, up there to the right. But they grossed me out for like the longest time. I couldn't even understand how people would eat these mucusy looking creatures. And then I was like, you know what? I'm going to try one. And I tried one with some of that horseradish, the cocktail sauce. And then there's another sauce, I'm forgetting what it's called. It has like onions in it, like a mignonette. Yeah, mignonette sauce. Oh my God. I'm a vinegar girl. I love it. I just shoot them back. So good.
Okay, so we're going with raw oysters at the Turtle Club in Naples, Florida.
And the fresh fish. This is the fresh catch of the day. You can't beat anything that's fresh.
Okay, I love that recommendation. And when you come up here, I'm taking you to Maison Premier in Brooklyn, and we're going to get a dozen oysters.
Yes. Oh, sounds good.
Couple dozen,
yeah.
That was awesome. Thank you so much. You make finance feel way less intimidating, way more fun. If you're not already following Priceless Tay, go fix that right now. And actually, in addition to your Instagram, give us all your handles.
Everything's Priceless Tay. PricelessTay. Priceless Tay.
And TikTok, Instagram, YouTube. Okay, awesome. Listen, if today's episode gave you guys something to think about, please share it with a friend. The more we normalize talking about money, the easier it gets to take control of it. As always, like and follow wherever you get your podcasts. Thanks again, Taylor.
Thank you.
And we'll see you next time.
Thanks for listening to The F Word with Priya Milani. If you like what you heard, hit subscribe wherever you're listening and leave us a review while you're at it. We're approval junkies. Don't forget, you can find a ton of great resources, content, courses, and other freebies at stashwealth.com. Now, for the capital S stuff our lawyers want us to say. StashWealth is a registered investment advisor. Content presented is for informational and educational purposes only and is not intended to make an offer or solicitation for any specific securities, product, service, or strategy. Consult with a qualified investment advisor, that's us, before implementing any strategy. Investing involves risk, including the loss of principal. Past performance does not guarantee future results. There, we said it.
Did I have that up?